Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, I think we're happy to be surrounded this morning with the India cricket team and the New Zealand side as well. I mean, that's a beautiful looking set, and I hope we start the day with the actual players someday. But, well, this is Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Sunday is the day, guys.
All pumped up, all ready, all getting excited. So, Nigel, what's it going to be? The cup is ours?
The cup's ours. The cup's coming back home for sure. And I'll tell you what, on Tuesday, the markets seem to have found a near-term bottom. India did well. We moved into the finals. Yeah. So Tuesday was the day. Indian cricket team finding its momentum. The Nifty finding its feet. So hopefully when we come back on Monday, things look even better from here on. But the boys are bringing back the cup. I'm not sure. I'm not sure whether one of the boys will say that
it's time for a goodbye.
It's time for a goodbye. So let's see. Let's see whether.
You know, we since we were able to do this now, we could have probably put the trophy in their hands as well.
It's there. The trophy's there. And it's on the India side.
Yes,
there.
Oh, yeah, of course. It's right here.
It's right in front of you. And it's on our side. So that's an indication.
Well, but we don't want to speak.
It's been a good week, actually.
It's been a good
Cricket,
week.
Markets. Fingers crossed.
Fingers crossed, absolutely. And, so that is, of course, on Sunday. Well, let's just sort of rewind back to the markets once again and, of course, take it from where we left off yesterday. And, of course, US is a bit of a problem. And, I've been asking this question for the last at least 10 days. Is a top in for US markets? Is a top especially in for US tech? And the answer more and more and more seems to be perhaps, at least in the near term, temporary yes. And look at what happened last night. S&P down 1.7, Nasdaq down 2.6. The Russell is down about 1.6% as well. So these are large, meaningful cuts. The S&P 500, well, it respected the 200-day moving average. Actually, I should say it re-respected the 200-day moving average. Intraday, it had slipped below it, but the graphics will move along. It finally ended above the 200-day. In that sense. The VIX was up 13.5% to about 25, nearly $25 index. That hit the it hit the low of 103.76. So 107.5 a few sessions back, and now 103.76. And of course, it bounced back above the 104 level. And that largely was because, the euro was back above the 108 mark, so it provided a little bit of stability to the broader index, the largest constituent of the dollar, the broader dollar index. Now, the news flow, and this is, of course, Trump postponing the Canada-Mexico tariffs to the 2nd of April. I mean, that's essentially when his team will get back to him with the study on tariffs around the world, and then, of course, he decides on what to do in terms of reciprocal tariffs, etc. So this is not going to be bunched up there along with the rest of all the other countries. But markets were unresponsive, and maybe because, there are still large risks looming. I think there are some steel tariffs, etc., which are due next week, and some metal tariffs, and there's been no word that those have been pushed out as well. So the general mood seems to be sell now, figure things out later. Regarding tariffs, trade, and more. The other part, of course, has been the AI bit, tech in the US. And yesterday, the big news, and which kind of sort of went under the radar in that sense, is that Alibaba launched a new DeepSeek competitor. And apparently, what they're essentially saying, Alibaba is saying is that this new AI agent competitor to DeepSeek uses a fraction of the data that DeepSeek uses, which itself uses a fraction of the data which, and compute power, etc., which OpenAI, ChatGPT, etc. use. And of course, they're saying it's equally good, if not better. Alibaba yesterday was up 8% in Hong Kong. Hong Kong itself was up 3%. It's broken out. And Alibaba now is up 60% on a year-to-date basis. And of course, stocks in the US sold off pretty sharply, especially the tech names. Nasdaq down almost 2.6, 2.7%. Tonight, you get the US jobs data. The whisper is that it's going to be a weaker number. We're in a phase of the market where you want the number to be strong, not weak. Strong will be good. But, I mean, we'll see. The median estimate is 160,000 jobs, unemployment rate at about, I think, 4%. Now, market recovery here in India continues, and volumes have picked up. And I sort of saw volumes yesterday, day before yesterday, compared to the last 30 and 60-day averages. Volumes are picking up on the cash side, which is good news on the way up. Now, the big winners have been in this spate of recovery. The metals index is up 10% in the last 3 days, and the oil and gas index is up 7.5% in the last 2 sessions. Remember, the 2 underperformers in this leg have been the Nifty Bank, large FII holdings, and of course the IT index, which is underperformed on a day like yesterday as well. Where do we go from here? Resistance levels first up. Nifty resistance at the 20-day moving average, which is at about 22,801. Actually, there's an intermediate resistance around 22,700, which was the earlier low. But we'll see. We left off at 22,550. Immediate support comes in at 22,353, and which is the 40-hourly exponential moving average. If that breaks, we'll see Nifty Bank support at 48,400, and the resistance comes in at the 20-day moving average, which is 49,096. The Gift Nifty will come up on your screen, and we'll see how we trade, how well we trade going into the weekend. It's always, especially with Trump, any day, of course, is good for surprising and shocking the market. But the weekend, there are 2 days. So that's essentially maybe a little bit of a hiccup at the margin, but 70 points lower, reacting to that Wall Street pressure that we saw. Surbhi.
You know, Prashant, if anything, what the last 2 days have told us, the US president and his aides are also watching the markets very carefully. These partial rollbacks that were announced. First, they said that, auto parts, which are under this US-Mexico-Canada agreement, they will be exempt from tariffs. Now they're saying that everything in that agreement will be exempt from tariffs. So at least they're, of course, in tune with what the concerns are. The market obviously is not too enthused about it. That's the thing. But anyway, for my piece this morning, the title that I wanted to go with is India Shines in Global Chaos. And it felt so good to say that, because we're saying that after a long, long time, after months of underperformance by the Indian market, we have been the rank outperformers this week. I'll come to that in just a bit. But first, a little more on this whole job situation in the US, which obviously is rattling markets. We'll, of course, get the jobs report tonight. Expectation would be anything between 160,000 to 170,000 job additions. 4% is the unemployment rate expectation. But the other bit, this whole Doge business, that's beginning to bite as well. There is a private report, people who forecast job openings, job markets, and they look at the overall, layoff situation. That report has indicated that the job cuts in the US are at the highest, or the layoffs in the US are at the highest since COVID. 2020, and that's squarely blamed on Doge and the fact that so many federal employees have had to leave their jobs. So that's obviously a big concern. Anyway, all those concerns from Wall Street, they've nicely moved over to Asia. So most Asian screens are negative. Japan's falling the most, actually. Japan's down about 1.5%. The Hang Seng is relatively better off. Why is Japan falling so much? They've got twin challenges and worries. One, their yields are surging because the Bank of Japan is hiking rates. 16-year highs on BOJ yields, on government of Japan yields, and that continues this morning as well. And then the yen is surging. It's a safe haven asset. The dollar index, imagine, when we started this month, the dollar index was above 107. Already in March, it stumbled to 104. So it's been a very sharp drawdown on the dollar. And which currencies have benefited? The Swiss franc and the yen. And the yen equation is looking very startling now. Imagine, just a couple of days back, we were talking 151, 152. Now it's 147. That's the surge in the yen that we've seen. Yesterday, the ECB cut rates along expected lines. 25 basis points of a rate cut was delivered. They've raised the inflation forecast just slightly. It's 2.3% now versus 2.1% earlier for the year. So that's ECB, as Europe continues to look at a big spending bazooka bonanza as well on several things like infrastructure and defense. By the way, cryptos were interesting. Cryptos sold off, big time overnight. This is despite the fact that executive order for building the U.S. crypto reserve, strategic crypto reserve, that's in. Donald Trump, Mr. Trump, President Trump signed that this morning. But the crypto market is very nervous about this whole tariff business. On Friday, that's today, there is a crypto summit that the White House is hosting, and the who's who of the crypto world will be attending. So let's see what headlines come in. But the sell-off was almost 3% to 6%. Bitcoin, I think, around 83,000 right now. Now coming to the India outperformance, and it feels good to say that because for the week as a whole, the Nifty's up about 2%, mid-cap 3%, small-cap index almost 5%. What a good performance. Lots of green on the screen. And we have to, really pray that the reduction in FPI selling that we've seen this week, that continues. Let's pull up yesterday's number first. Yesterday, the sell number was 2,377 crores. DII buying was not too heavy yesterday, but focus on that FPI number, the sell number. Now let's look at the weekly trend. 4,800 crores on Monday, 3,400 crores Tuesday. Wednesday was less than 3,000 crores, and yesterday's number is looking very good. It's trending closer to the 2,000 mark. If this trend continues, if people realize that now there's a lot of volatility in global markets, US market is faltering, India's already gone through a correction. If that tide starts turning, we are going to feel very, very good. I'll quickly end with some of the stocks that will be on the radar. We'll tell you more about them as we go forward. Loris is investing a big amount of money, about 900 crores in a joint venture. Kalpatru's bagged lots of orders. And Indigo is getting into long-haul flights. They are going to Manchester and Amsterdam non-stop. I don't know if you're going there or not, Nigel. Any plans?
No ways. If I was going to travel anyway, it would be to Dubai for the Champions Trophy, which is not the case. But I'm going to the mountains next week, so I'm happy to visit Raniket, going
Lovely,
to Uttarakhand.
lovely.
That's it.
Yeah.
Let's take stock of the market. Well, you have these macro tailwinds that are playing out, both for the emerging markets with the dollar index coming down to around 104. And the tailwind for the Indian markets has been crude oil prices. It continues to remain lower, and that's very, very encouraging. Moving to for the week, for the year itself, India has underperformed. But after a while, India is the outperformer for the week. You compare us with the Brazilian index, with the Shanghai index as well. Remember, those indices actually have outperformed us. And even the mother market, which is the US market, the Dow, the Nasdaq and the S&P, all of them have had their worst week in multiple months. And on that backdrop, India has been outperforming. And in yesterday's trading session, there was a bit of a short covering bounce that took place, particularly on the Nifty Bank. It didn't outperform, but you saw the open interest, that was a little bit low, while on the Nifty, it was more or less flattish. The FIs, in the cash market, the selling has come down by nearly around half. It's headed towards a net sell number of around 2,000 crores, which is much lower than what we have seen in the past. And just take a look at that. In yesterday's trading session, we had a swing factor of close to 11,000 contracts. That is, 8,000 short contracts got closed out and close to 3,000 long contracts were added. And in the last few trading sessions, well, these net short positions actually have come down, even in percentage terms, from around 85%, it's come down to around 81.5% or thereabouts. What about in stock futures? Well, this is another interesting one, right? The FIs, they were net long on stock futures. We have been making that point as well. Close to 15 lakh contracts on the long side is what we have seen. They have been net long on stock futures. But in the last few trading sessions, if you look at it, the short positioning on stock futures, it's gradually been coming down. And if you just do a summation of this, it's close to around 90,000 to a lakh contracts is what they've covered out on the short side on stock futures, telling you on individual stocks, some part of the short covering bounce has already taken place to a larger manner. Options data comes up for you on the screen, and both these two were fairly active in yesterday's trading session, which brings us to the levels. Going by the options data, going by the technical levels, well, on the upside, the 20 DMA, that's going to be very, very important for the Nifty as well as the Nifty Bank. So you'll get a fresh leg up once this gets taken out. However, going by the options data, that's the important mark on the downside. By the end of today, you want to save this, don't want this to get broken, which is 250 points away from current levels to 22,250. While on the Nifty Bank, last two trading sessions, we have gone closer to around the 48,200 mark and bounced off that. So you don't want these levels to break, and you want the Nifty and the Nifty Bank gradually to move towards the 20 DMA. Talking about the 20 DMA, yesterday a large constituent of the market finally was finding its form. Valuations are in favor, and now I'm looking at a crucial technical mark on it. The Reliance Industries, if we can get past the 20 DMA, that'll be very, very good news for the Nifty, because by itself, it has a large part of the Nifty. So this one as well holds the key, Reliance finding its form, and you want Nifty as well as the Nifty Bank to gradually trend up towards the 20 DMA.
Okay, all right, got that. So let's just hope that the good tidings, good going so far this week continues on Friday as well. So let's get to the equity call of the morning. Chris Wood of Jefferies says that for Asia Pacific ex-Japan relative return portfolios, greed and fear will increase the weightage in China by 2 percentage points to adjust for the recent outperformance. He says this will be paid for by reducing the weightage in India and in Korea by 1 percentage point each. He adds that greed and fear is to make some further changes in the various portfolios. He says the weightings in Alibaba, BYD, Tencent and cattle in the Asia ex-Japan long-only portfolio will be increased by 1 percentage point each, with the investment paid for by removing the investments in Indian industrial Siemens. So they're cutting back a little bit on India and increasing the weightage on China.
All right. Well, that's the thing, right? I mean, I think you know, this China AI thing is very much alive, and it's sucking a lot of money from around the world into that market. And you just have to see what's happening there with Hang Seng and the tech names there.